Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monty, and this is a one-year daily candle chart of the Invesco QQQ Trust, which is ticker symbol QQQ, tracks the NASDAQ market, tech sector. And if you're brand new to this market report, understand that each and every week I draw my forecast lines, which I call zip lines, and then the week after, I then check to see how the forecast worked out. And as you can see here, I'll have to zoom in a little bit more so you can see that it's hard to see. Last week I drew this diagonal line knowing that this was going to be a shortened trading week. I ended that line right there with a target of 293.18. And as you can see, the forecast worked out perfectly. Now, while that is a success for this week's target, what does that mean for next week? Well, now we have to take out our trading checklist. And for the Market Rebellion members, they know exactly what that is. It's a checklist that I've come up with where I analyze the signals to see what the overwhelming majority of signals look like, whether they be bullish or bearish. And right now, we have some bearish signs showing up for the short term. If you take a look, we'll start off with the candles. You can see that we have a long stretch of green candles right there, known as a stale green light. And while the price has been going up, the volume is starting to drift off here. And while it's not a big drop in volume, it does tell us that the buyers are getting a little tired. Now with that, you could also see up here, I drew a horizontal line. That is a gap fill resistance level, mainly because 80% of the time when gaps fill, prices reverse from those gap fill points and go lower. And that's exactly what I think we're going to see next week. In fact, if you look down a little bit further on this chart, you'll see that the stochastics is showing an overbought reading right there. Once it crosses over that 80 mark, that's that horizontal line there in black. Once it goes over 80, it's now labeled as overbought. And while the CCI is already overbought, look what's happening. As I magnify that, you can see that it's starting to hinge lower. Now, I do put a lot of weight into the CCI. It's a very sensitive indicator that basically tells us when the shift is taking place between the buyers and sellers and vice versa. And so next week, what I'm going to do is draw a line to the downside. And I'm not going to get crazy here, but I do believe that we're going to move right back down to that moving average. And next week's target is 285.12, 285.12. Keep in mind that next Friday is options expiration Friday for the monthly options for July, and that will most likely have an effect on the market the week after expiration. So that is the cues. If we take a look at IWM, you'll see that this is another one where I drew my lines to the upside, forecasting that we would go higher, and I kept that target right there of 179.23. Now, from the looks of the volume here, look down below, we did have a drop in volume today on IWM. So that's telling us that the buyers are getting tired. And again, look at that repetition in the CCI. We're seeing that it's starting to hinge. Now, if you took a long position based on my forecast last week or this week, chances are you made some money. But I'm not going to continue on with that target high. In fact, what I'm going to do is remove that. And I'm going to start drawing my zip lines to the downside. Again, very similar to what I did in the Qs. I'm looking at a downside target for IWM of 169.63, 169.63. So watch out below. Again, not a major sell-off by any stretch, but as you can see, the markets oscillate up and down. We got zigzag patterns known as trading legs, and I am a strict follower of Dow theory, which one of the tenets of Dow theory is that volume supports the trend. And right there, like I said before, we don't see that volume supporting this upward move in IWM. Now, if I move right along to the diamonds, ticker symbol DIA, it's going to be the same story pretty much. I don't think we're going to fill that gap. Remember, last week I said I'm not putting my bullhorns on. I said there's a chance we could fill that gap, but this chance is dwindling very quickly because of this two-day pattern right here. I'm going to erase that line and draw it downward with that zip line, but I want to magnify this for you. Let me just expand that. It's hard to see what color that body is because there's almost no body at all. But if you look down at the volume, that tells us that we closed slightly lower from the opening today on July 8th. So this labels this two-day pattern as a bearish harami. Notice we had a long stretch of green, now followed by that little sliver of red on a drop in volume on the way up. Oscillator starting to hinge lower. So again, that means downside pressure is what I'm going to be expecting for next week. So let me go ahead and draw that for you to the downside. Remember, this is called the zip line. Very short-term targets. I think we're going to pull back and possibly give back everything that we've gained in the short and trading week. I'm putting a downside target on DIA at 307.13, 307.13. So keep that in mind. Taking a look, I'm going to start with the VIX actually before I go to the S&P. You can see that the VIX forecast was almost reached today. And while I think there is a chance that on Monday we could do that, I do believe that the VIX is going to start to bounce right here off of this key support level. So all I'm doing is I'm creating this pivot point, which I talked about last week. I said I wasn't drawing the pivot point yet. I said we have to wait and see what happens with that. So this is also going to be a wait and see, but I'm putting all the emphasis to the upside on the VIX. Look at the oversold condition on the CCI. That's the lowest it's been all year. And the stochastics is also oversold. So there's a good chance the VIX is going to rally. I'm putting a target on that at 27.13. And keep in mind that the VIX, for the most part, is inversely related to the S&P. So if I'm talking about a possible rally in the VIX, that means I'm looking at a possible sell-off in the S&P. And again, this open gap is still open, but I think because of the long stretch of green down below, we're most likely not going to hit that. In fact, this area right here becomes a new resistance point. Let me just do that. I'm going to remove that line and draw this as a new resistance line on the S&P, the spiders, SPY. Again, long stretch of green means we're going to see red pretty soon. We normally don't get that long of a green stretch before the red shows up. And down below, as I magnify that, what do we see? We see a hinge to the downside on the CCI. Now, I did mention that I would try to talk about silver. A couple of our viewers were asking about silver and Ethereum. I'm not going to have time for Ethereum, but I will talk about silver. Silver and gold are extremely oversold now, technically, that is. I already have a forecast out of 1887 on silver for our members. And this horizontal line, I have to back up to really give you the big picture on what that is. That horizontal line is a key roll reversal. Back here it was resistance. Resistance was broken, and now I expect that to hold as support. Remember that zigzag line that I talk a lot about is that roll reversal that you see throughout the markets in individual stocks, major markets, indices, currencies, commodities, you name it. We get these zigzag patterns known as roll reversal. So that is in place already. I'm going to keep that in place. I'm not going to be able to look at silver every single week, but I'm just giving you that highlight there. And I will talk about gold briefly because they're more or less related in the precious metal sector. If I look at GLD, this one is extremely oversold. Wide divergence from that moving average. Look at this massive drop in volume on the way down. See that? This tells us the sellers are losing that momentum, and with that wide divergence, there's a good chance we're going to snap back. So I will do a little bit of a forecast here to a roll reversal resistance up here. And I do think that conservatively gold can get back to 166.06. Look at the oscillators down there, pivoting up, right? They're hinging up. Now finally, let's talk a little bit about recession. What's a recession? Well, recession basically is when consumers become fearful. They're not quite certain that the economy is going to stay strong, so they start holding on to their dollars. Now, when you couple a recessionary condition with an inflationary condition, that's known as stagflation. That's the worst condition that you can be in coming into a recession, and we are there. Now, most of you may not be aware of what's happening in Poland, in the Netherlands, in Germany, but let me give you a little snapshot of what's happening. I'll talk about this and why this could most definitely affect our economy. This is just some quick clips that I took from DuckDuckGo, and you can see that the Dutch tractors are rolling. The farmers are protesting. They're literally shutting down the entire country. The shelves are bare in the supermarkets, and guess what? The Germans joined in, and they too are protesting, along with, guess what? The Indian farmers are protesting. We have the Netherlands, we have Germany, And we have farmers all over the world right now. And what most people, again, don't know is that the Netherlands is the #2 exporter of agricultural products, with Germany right behind them. So when they're shutting down in protest of nitrogen restrictions in their fertilizers, and the Dutch government wants to have them basically destroy a third of their cattle herds because it's polluting the air, they're fighting back. Now, in the meantime, while this battle is going on, what does that mean for our food supply? Well, we already talked about that a couple of weeks ago and even some months ago, of how the U.S. railroads are cutting back on the distribution or transportation of nitrogen. And if you talk to any farmer, this is a serious condition. It's not going to affect us by the end of this summer, but food supplies are going to dwindle very, very quickly as we get into the beginning of the first quarter of 2023. And that is most likely just going to compound this problem that we have with inflation and recession combined as stagflation. Now, don't panic, please. Let me just give you some words of comfort here, right? If you know a storm is coming and you're preparing for the storm, then obviously there's a lot less stress than if you're not prepared and it hits you. I am not an alarmist by any stretch. What I'm doing is I'm informing people, I'm educating people, and I'm preparing people for not just the down market, and this what I will label as what could be the greatest bear market in the history of bear markets. I'm showing our option traders how to make money on the way down. The Market Rebellion members are geared up with negative delta. We have bearish positions on. We're putting trade alerts out. We're educating people on risk management. And if you're not there yet, if you just want that added little bit of education to help you along the way here, then please just go to Market Rebellion and ask them what they have that can help you. They have a variety of products and educational services that will give you that edge that you may need to not just make money on the way down, but to protect what you have on the way down. So please, thank you. Again, thank you for the likes, the subscriptions, the new subscriptions, hitting that button and sharing. And also, thank you for the comments. We have a lot of comments coming in. I want to thank you for that. That interaction is helping all the other viewers, and it's also helping us get through the algorithms to get us on the menu for YouTube. So have a great weekend, and we'll talk to you soon. So long.